Yo, what up? Welcome back to Table of Entrepreneurs. If you haven't already seen the previous videos in your series, this will be the last one. So please take the time to go back and watch that. Thank you for all those who have subscribed so far. If you haven't subscribed yet, please go ahead and hit that subscribe button. Once you hit that subscribe button, please go ahead and hit the notification for all, so that way as soon as the content is coming out, it's popping up in your feeds and you're able to stay up to date and current with this information. Also, I've been noticing that we're growing, man. Every time I post a video, I go back and I look at the analytics, and man, I appreciate y'all for taking the time to share and doing word of mouth and all that stuff like that. Is going to help us grow here at Table of Entrepreneurs. I'm not going to waste your time. As always, we're going to jump right into it, because who's going to stop me? Nobody. Listen, today we're going to be talking about investing for your future, okay? In the description below will be a link for Webull. I'll also be a link for this book on a Webull tip. Go ahead and download that. It's 1 to 2 free shares just for creating an account, right? Some of you guys who've been telling me that you downloaded, I said you only get 1 stock for downloading and creating an account, and 1 stock for depositing a $100 initial deposit. And I've been having a couple of y'all tell me you got 2 free stocks when you created an account and got approved, and then you got another 2 free stocks when you deposited your first initial $100. Listen, the big deal about that, while we're talking about Webull just added another 1,000 shares of Google. And if you don't know what Google's share price is right now, go ahead and look it up. Go ahead and look it up, right? I'm not guaranteeing that you're going to be able to get a stock like that when you create your account. However, according to Webull right now, that is a possibility. And I'm telling you, at a minimum, that's over $1,500. Now, if you aim at nothing, you will hit it every single time. Throughout the series, we've been talking about excuses and shifting the way you think to change your life, the way you live, and get a different outcome from what you've had. So if you aim at nothing, you will hit nothing every single time, right? Fortunately, a lot of you guys already know about investing. You may not think you do, but you do, right? Some of you out there have an Apple, iPhone, some of you got Android, whatever it is that you have, you already are buying into these, paying these companies. So why not own a piece of them? Right? So I like Apple. I'm not endorsing Apple or nothing like that. I'm not a financial advisor. So, take what you hear from here with a grain of salt, do your own research and make your own decisions. I have an iPhone. I have a lot of Apple products. So I decided, hey, I'm paying for this. I'm paying the company. So why not own a part of the company? So I also invested in Apple. I invested in what's called the Apple Real Estate Investment Trust. If you don't know what it is, look it up. Do some research on that as well. Right? But I can guarantee you that you already know more about the stock market and investing than you think you do. It's all around you, everywhere you go, from gas to the electricity in your house, to the running water that you have, right? To the wood that it takes to build a home, right? To the glass that you drink out of, when you pop yourself a soda or even soda, right? So many different things out there, the clothes that's on your back, right? Listen, we're gonna be talking about the rule of 72. Right? The rule of 72, and when you're talking about investing, right, is really all you need is perspective, right? Maybe if you shift your perspective when it comes to what investing is and how you're going to be able to make money, how you're going to be able to double your money or flip your money, return your money, I think it'll help you guys out a lot. So essentially, the rule of 72 says that if you divide your investments that's expected, the annual return is by 72, that'll be the rule of 72, right? Divide your investment's expected annual return by 72. Now, for example, what I mean by that is, if your investment growth of return is going to be about 4%, you divide that, that'll take you about 18 years, right? It'll take you about 18 years before your money doubles. Now, if you have an investment growth rate of about 12%, that's going to put you at 6 years doubling your money. Why is that important, right? Before I talked about compound interest and kind of the power of compound interest and what compound interest is. Remember in another video I talked about, if you take the time and invest in yourself about $3,000 a year into an account that had about 8% interest rate, where your money would be after 10 years. So this is really the same thing. And what I was talking to you about before, and I didn't want to get too much into it because I knew it was going to be another video coming, was going to be the rule of 72. So in short, the rule of 72 is really, how long it's going to take for your money to double based off of whatever interest rate or whatever it is that you have. So why invest into a stock? Well, this is why, right? Common stocks represent ownership of a tiny piece of a company. The price of a stock rises and falls along with the company's performance and prospects. Now, in general, if a company grows its sales and profits constantly, it will rise in value over time. Okay, Lion, what does that mean? Get to it. I got you. Listen, investing in the stock market can be risky, but again, it can also not be as bad as you expect. So what I'm saying on it is, historically, stocks have rewarded investors who are willing to take the risk. I'm going to talk to you about some prices and some returns and stuff like that, as opposed to those who don't. You put your money into a saving account. Go ahead and tell me how much money that you're making annually on whatever amount that you put in. Right? What's the annual percentage that you'll have on your general savings account? Now, stocks that outperform, these stocks will always outperform that. Always outperform that. So a small cap company, right? Historically, for the past couple of years, has been returning an annual return of 16.5%. A large cap company has been returning around 11.8%. You got the long-term government bonds returning about 6.1%, and then the treasury bills at about 3.6%. Right? Now, since 1926, stocks of large companies have averaged an annual return of 11.8%. Right? Why is that important? So you go back to the rule of 72, you do the math, that's going to tell you how long it's going to take for your money to double. Now, do understand that when you're investing in the stock market, there's breadth, right? There's ups and downs in the stock market. There's ebbs and flows. It doesn't go straight up in a line all year long. So do understand that. Do some research before you decide to invest into a company and figure out what that company is, kind of what their expected growth is, what their history has been with their finances and revenue and stuff like that before you jump into it. Which is another reason I'm telling you, on Webull, you can get into what's called paper trading. With paper trading, again, they give you $1 million of virtual money. You can't take it out and do nothing with it. However, you can use it to invest into your mind, and then also it'll give you some skill base before you start spending your own actual money. I still encourage you, download the Webull link, get your shares, whether it's 1 or 2, depending on the promotion that they're running at the time, and then go ahead and deposit a $100 initial deposit to get extra stocks. Right? Again, Google has given Webull an additional 1,000 shares to be added to their platform, and man, that could be easy money to you. Now, mutual funds is another way that you can invest if you don't want to invest into like the individual stocks of itself. Now, the thing with mutual funds, though, is that mutual funds combine the resources of many investments, and they purchase, things from stocks, bonds, or other securities, and then they mix that stuff together. So when you invest into a mutual fund, you're investing into multiple companies. The difference is the mutual fund is controlling that, right? And then the fund companies hire professional managers to be able to do your buying, trading, selling, et cetera, et cetera, et cetera. Think about what type of investor that you want to be. Right? Think about the type of risk that you're willing to accept. And once you figure that stuff out, develop a plan and how you're going to move forward with investing. Already have your money in Webull, right? The $100 that I told you about. And then go ahead and do your paper trading. Paper trade until, for about a week, 2 weeks, that you see that yourself is constantly in the green. Overall, not on every single stock, but overall. Also, take the time to do what I did, man. Read a bunch. That's how I'm learning, that's how I'm growing, and I'm willing to give that information back to you all. Another type of investment that you can kind of get into, and I'm not encouraging that you do or don't, just breaking it down for you guys, is what's called index funds. Now, what an index fund is essentially a basket collection of a whole bunch of other bonds that are designed to represent the performance, essentially, of the market. So, one simple example that I can give you would be like the S&P 500. For the most part, I think people who don't even know about how to invest have heard of the S&P 500 index. Now, if you found this information that we've been talking about so far, from series 1, part 1, up until right now where we at, then there's another book that you can go out and get, and it's called Stock Market for Beginners. For a lot of you out there that have Apple, you can go to iBooks, go to the bookstore, and then you can look up investment books. And then there's a bunch of books on there, man, that's completely free, or at least partial books that are free that you can read and start gaining and learning information from. So nobody else will work as hard as you to build your wealth. You need to understand that. This is why I'm constantly, every single video I'm pushing, you got to get up, you got to go do it. You got to change the way you think, you got to put it into action. And this is why I'm saying, who gonna stop me? Right? I want you guys to start thinking like that. Who's gonna stop you? Who's gonna get in your way? You see, speed bumps aren't intended to stop you. They're intended to slow you down. That is it. Some people stop, right? But if you're like me, you're gonna just roll over and keep doing it. Keep doing your thing, all right? So who gonna stop me? I want y'all to start thinking that. When you wake up in the morning, look in the mirror and ask yourself that question. Who gonna stop me, right? And the answer should be nobody. I refuse to even get in my own way and slow myself down for my future growth and potential, because I set a dream and I'm gonna accomplish that. Again, the next video, we're gonna be talking about the vision board. So stick around for that. Keep rocking with me, keep sharing this information so we can get it out and grow this channel up to a minimum of 1,000, right? By the time we get to 1,000, that's gonna unlock some other things for us to be able to do here on YouTube. So if you decide that you wanna go into a mutual fund, again, I'm not a financial advisor. I'm not telling you to do, not to do. I'm just giving you guys the basics of it. If you decide to select a mutual fund, some things that you need to look for, some things that you need to consider. There's a thing called Morningstar ratings. So Morningstar ratings will kind of break down, on a scale and tell you what they think of that company. Obviously 5 stars is the best. You need to also look at that company's expense ratio and how they manage their money. And then also some of them have, most of them have management fees. And this is not the general stock I'm talking about. This is a mutual fund. All right. Historical performance versus the category average. And then the category average would be, let's say I'm investing into a mutual fund for real estate, the category would be real estate. Or if it's, tech, then it would be tech. You get what I'm saying? Stuff like that. Now, also on general stocks, regular stocks, you want to look at the same things, right? You also want to look at, their expense ratio, their income. You want to look at, how they've been managing their money. You want to look at the performance of the stock. They, depending on what platform you have, they can break that down into minutes. You can break it down into days, weeks, months, over a period of years, and kind of look at that and see. What you do want to see, even though the market has breadth, you want to see that breadth constantly going up, okay? You want to be cautious of investing into a stock that obviously is going backwards, because, why? Just why? So there's some investing that you can do for retirement. You got your 401k, you got your traditional IRA, and then you also my bad. You also have your Roth IRA. Listen, if you have questions for me on some things, go ahead and drop a comment below, and then I'll take the time to read it and I'll get back to you. If you're following me on Snapchat, obviously you can contact me over there. We're finna eat together, right? Remember, create the mindset that who gonna stop you, right? And again, that should be nobody. Get up, look in the mirror. When you're driving in your car, right? You're sitting at work on your job, or whatever it is that you do. Throughout the day, just ask yourself, who gonna stop me? Nobody. When you get a negative thought or something that challenges, the growth of your potential, ask yourself, who gonna stop me, right? Because sometimes those thoughts get in your head and then it creates fear. That fear begins to sit and manifest in your brain, and the next thing you know, it altered you from accomplishing the goals and dreams that you had for yourself. I appreciate you guys for taking the time to watch this video. Again, like, comment, subscribe. The Weeble link is below. Go ahead and get started on your future today. I appreciate your time. Till next time.